Hey, what's up, Elyson? We are back with another interview of entrepreneurs who are here in Elyson. If you remember, last year we had that post talking about who here in Elyson is an entrepreneur. I had an interview earlier this year, and now we're here for interview number 2 with Mr. Leon Ren. And I'm excited to get to hear a little bit more of his story. I know you, Leon, as a financial advisor. I see you on Facebook, Elyson page all the time, commenting, helping, giving advice on random little things. But tell us, who is Leon Ren? Who was Leon Ren?
Yeah.
And how did you end up in Elyson?
Yeah, that's a great question. So my name is Leon. We moved to Elyson towards the end of 2023, and I am now a financial advisor with a license. And who was Leon before?
Yeah.
That's a good question. I was educated as an engineer.
Okay.
I had my bachelor degree and a master degree in computer science.
Yeah.
I came to United States as a programmer.
Interesting.
Just like a lot of people.
Okay.
But what triggered me to do investment or to learn investment is I'm thinking I was making money too slow.
Oh, okay.
Yeah, that's too slow because of the market. No matter it's real estate or the stock market, they are moving every day.
Yeah.
No matter what work you do, no matter how much money you make.
Right.
So that was the driver.
Yeah.
Back then, I was working at Continental Airline in downtown Houston.
Okay.
I learned a class from Dave Ramsey.
Okay, yeah.
So that's the starting point.
Great
Yeah.
course.
Yeah.
For sure. I've heard it highly recommended all across many people. For sure.
Cut that credit card.
Okay. Interesting.
Yeah.
So did you do it? Did you just cut debt and credit cards all the way?
Not really cut the credit card all the way, but my wife did make sure that there is no credit card debt, so we pay off the balance every cycle, and we're really trying to not have a lot of spendings on the credit card back then. That was probably like 15 years ago or so.
Yeah, good decisions for sure.
Yeah.
For all of us.
Yeah. So that's how I get started. But after many years, there's a guy called Warren Buffett.
Yep.
So
I've heard of him maybe once or twice. I don't know.
Yeah, he's number one if you're really into investment, because of you have to treat investment like a business. You have to start with investment from accounting. Those are two pillars for the investment.
Okay.
So from his kind of teaching or influence, I start to learn accounting, start to learn investment.
I see.
So I been working before this.
Yeah.
I have been working for university as an investment accountant for many years.
I see.
That was the foundation of this work.
And what do you do as a university investment accountant? I didn't even know universities invest. Like, what do universities invest into?
Yeah. University, they have to have an endowment.
Okay.
They must to have endowment for multiple purpose.
I see.
To support your kids, to support my kids for the scholarship.
Okay.
And to support the faculty for the chair, endowed chair, if you are endowed chair of a business college, right? So that money will be associated with you to support your teaching, your research.
I see.
So university must have endowment. And this endowment is invested in equity, fixed income, hedge fund, private equity, real estate, and some of the life insurance as well.
Okay.
So it depends on the private university or public university.
Yeah.
For university like Stanford or Rice, those top universities have billions of dollars.
Wow.
For smaller ones, smaller private universities, they have hundreds of million as well.
Wow.
So that's why.
Wow, interesting. So tell me, like, what was your job actually
My job.
tangibly at the university? Did you
Yes, sir.
have to look for new things to invest into or kind of monitor things, or what was that like?
Absolutely.
On the accounting side.
So it's from the accounting perspective, we are taking down the market value from the end of last month to the end of this month. This is called a monthly close.
I see.
When we close this month, they have a lot of activities in between. So they have interest paid, they have dividend paid,
I see.
they have a return of capital, and they have realized gain and unrealized gain. So all these activities need to be reconciled to our book.
I see.
We got audited every year. So we prepare for the single audit and the annual audit. So once we got an audit, we will present this financial statement as a university to the JP Morgan Bank, to Wells Fargo, to the Board of Trustees. This is our financial statement.
Right.
And one component of a financial statement is the investment.
I see.
So, and that's just the accounting part of that.
Yeah.
And towards the end of the year, you also have to label this is level 1, level 2, level 3.
Yeah.
So level 1 is most liquid. Level 2 is kind of hard. Level 3 is kind of those kind of not so easy to sell, those kind of things. So investment accountant is to deal with all this stuff.
I see. Yeah. Interesting. Quite complex. Had no idea. No idea.
It's a part of accounting team. We it used to be a busy schedule.
Yeah.
Yeah.
So what made you like have this light bulb moment, like let me start an investment business? Like what
yeah, that was a great question. So towards the end of the COVID years, I was hopping between different UC campus.
I see.
First at UCI, then UC Davis.
I see.
But the job didn't last long. And I didn't get the job at UC Davis. So we just, my wife's recommendation, we just moved back to Texas.
Okay.
She wanted this way, she preferred this way. She said, let's go back to Texas. Okay. Let's enjoy the low cost of housing and the food again. She mentioned the food.
Yeah.
So that's how we moved back.
Yeah.
Yeah.
Great. The food is definitely a reason to move back, right? Is it Tex-Mex or what is the big driver?
You have good food over here.
Absolutely.
Yeah, you gotta ask different people what's your opinion on food. But we used to eat at the old Bel Air Chinatown area. Okay. We used to have a condo over there, but we love the food just generally. I've been an in and out guy.
Yeah.
For
long
many
time.
For California years. Hey,
lots of different options. For sure.
Absolutely.
So you were in Bel Air and then you moved to Elyson. Is that how that worked?
No, that was in 2007, 2008. Those times. Then we had 12 years in California.
I see. Got it. And then you moved from there to Elyson.
Yeah, we come back. Yeah.
Cool.
Yeah.
Elyson.
Yeah, it's a great place.
Yeah, for sure. So walk me through then from the point of view of an investor, right? I imagine it's quite complicated. And I hear different types of investors. You got the daily movers and traders, day trading type people. And then you got the Warren Buffetts who you talked about who buy, hold, and then occasionally, like right now, sell, right? A lot of stuff. What's your take?
What's my take? That's a great question.
Yeah.
That's a great question. So if you think investment, you start from inside out. So this investment is a tool to help you to live long and have a peaceful life.
Sure.
To supplement your income as no matter what you work for. You are a builder, you build Elyson to supply to that building business.
Okay.
Things like that. So there are different type of, when we talk about the investment, right? There are day trader, there are frequent trading people.
Yeah.
There are hot stock follower, like follow Elon Musk, follow Tesla, follow NVIDIA, right?
Yep.
And there is this guy, Warren Buffett. He's 94 years old.
Yep.
He like to hold a company like a Coca-Cola, Apple, those companies.
Right.
Even though when you look at the financial statement, it's not as shiny as NVIDIA.
Okay.
So his idea is he want to stay with this business.
Yep.
He will never have to sell.
I see.
That's his philosophy. He used to be say this. I buy this company.
Yep.
I put it in the box or put it in the fridge and close the door. For 20 years, I'm still good. And believe it or not, Coca-Cola is that kind of company.
I'm not sure what I could put in the fridge for 20 years and it'll still be good, but I understand what you're saying.
Yeah,
though, right? He buys with the intention forever of holding.
Forever, unless some underlying economic change.
Right.
And given today's economy or technological advance, you do have things change.
Yeah.
Electric cars. All the other stuff, NVIDIA taking place of Intel, those kind. You do have a change.
Right.
So you will see day trader as well. And be honest with you, my father-in-law used to be a day trader.
Okay.
And I see other people in the community, they are day trader as well.
Yeah.
Nothing wrong with that if that's your style.
Yes. Okay.
So
Got it. And then for you, you kind of look, and I imagine this is complicated because you have different clients, right, that want to invest. They may have different strategies, different end goals.
Right.
How do you manage that centrally yourself?
That's a good question. We have to align our personal philosophy or the same philosophy between families first.
Yeah.
So I'm a long-term holding person.
Okay.
I'm a kind of index person.
I see.
I'm kind of follow a big company.
Okay.
Like a traditional company, like a Google, Microsoft. Those.
Yes.
I'm not sure if you heard about Microsoft, but Microsoft kind of
small company. Yeah.
So, kind of a traditional company.
Yeah.
So my clients would have a similar view to
Got
me.
it.
Take an investment as a long-term view.
I see.
And take an investment income as a supplemental to their day job.
Okay.
To provide a fund for the next new car.
I see.
To provide the fund for the daughter or son to go to college.
Sure.
For this similar style. So we have to tie our personal philosophy first.
Yeah.
So I wouldn't be able to serve anyone or everyone just to say, if you're a day trader, I would be able to help you. I would have to first convert you to believe long-term holding is more beneficial.
Yeah, because that's the style of what you do. You're good at that.
I'm good with that. I'm good with buy the right thing.
Yes.
And just hold it.
Yeah.
And after 5 years, I see that new car.
Okay,
I sell that and buy that new car.
Okay.
That's me.
Yeah, no, that's good. That's really good. I mean, obviously Warren Buffett's done it for years. He's been very successful, and it can be done, right?
It can be done, and have faith in America's economy, even though we have recently a dip.
Yeah. So tell me about that, man. I mean, I'm losing money on Nvidia here. Like, what's up with Nvidia? Like the stocks in general, and and how do you create a strategy that kind of traverses if it does go down, right? Like, we don't know, or maybe at the top, or maybe it's going to flatten out and go up. We don't know, but traverse an uncertain market, right? How do you go about the shifting markets when you have a long-term strategy?
Sure, Aaron. So first of all, that's a great question. So nobody knows.
Yeah.
You ask Warren Buffett, he doesn't know either. You ask the other people, the Wall Street people, they have all the models, but they don't know. Nobody has a crystal ball.
Okay.
So nobody has a crystal ball. That's the first thing. Second one is when you buy this company, you are not just buying a ticker of NVDA. You are buying a piece of that company.
Yeah.
When that company do well, you do well.
Got it.
So your idea will be, I'm part of this company.
Okay.
So how do you judge if a company does well or not?
Yeah.
One of the way is looking at the financial statement.
Got it.
So I got the financial statement of NVIDIA over here.
Okay.
They just ended the fiscal year of January 26. And you can see they list the revenue and they list the net income per share.
Got it. Okay.
So you have a per share, how much? 130, 120 per share as of right now in the market, right? And each of that share earns $3.
Yeah.
So $3 divided by 120 is probably like one out of 40 or something, right?
Okay. Yep.
For a tech company, 1 out of 40 is normal.
Okay.
So that's how you can tell it's overvalued, undervalued, who is dumping it, who is buying it. You must know this yourself.
Got it.
My name is Aaron. Am I able to say this?
Yes. Okay. I see.
That's how you tell.
Got it.
Yeah.
And then when markets do shift, like let's just say we do get some weakening. Maybe the income per share it goes down, right? For some reason. Maybe it's new AI models, right, that are coming out.
Yeah.
DeepSeek, all that kind of stuff. How do you help someone as an advisor traverse that time?
So income per share, that's a very good question. That's a technical question. So income per share basically is all the earnings divided by the number of shares outstanding.
Yeah.
So there are several factors affect this formula. So NVIDIA has been repurchasing the outstanding shares.
I see.
They spend like how much? A couple years ago, it used to be like a 3-5 billion. Now it's probably like a 30 billion. So when they spend that kind of money, the outstanding share is going to go up or go down. It's going to be go down because they buy it, they recycle it, they're reducing it. So even though after this wave of a hardware upgrade, right? People are building data centers, they're building these AI tools, right? So we as an investor public, just like you, we worry about if NVIDIA is going to be like next Cisco, right? So they keep buying back the outstanding shares. That makes the number less and less.
I see.
So even if their earning can be subject to the competition from overseas, from domestic competition, they have ways, they have different ways
to maneuver things.
Not maneuver, but to control a little bit, to access influence.
Right. Yeah, because I mean, if you're reducing ultimately the quantity of shares that are out there, then because of the lack in supply, the demand, if the demand stays constant, the price
something like that,
right? So yeah, exactly. Interesting. Okay.
And also they have other ways of paying dividend. Yeah. For example, if some tech AI company or big tech company, they're mature, right? They pay big dividend. This is Apple.
Got it.
Apple pay a lot of dividends.
Got it.
Yeah.
Okay. No,
maybe so much more, and that made Apple retained earning going to negative.
Sure. Got it.
Yeah. So
good.
Yeah,
Very
they have a lot of factors around this, and just from the reading NVIDIA's financial statement, I really admire the company. They can capture what's hot right now. They were not this big on the data center infrastructure business.
Interesting.
They were pretty big on the graphic card business. Many years ago. But this company is doing great in terms of capture the
expanded scope of things. Interesting. Okay. Yeah, I don't follow it as closely, obviously, as you do.
I don't either, but when you read their earnings, they will tell you,
got it.
Hey, Aaron, my name is NVIDIA company.
Sure.
This quarter, this segment, the data center is making how much money? The graphic card is making how much money compared to last year?
Got it. Very good. Very good.
So they tell you everything. They have to because they're a public company.
Sure. Absolutely.
Yeah.
So speak to, let's just say there's a person out there right now that maybe they're not invested in the market right now, period, or they haven't yet, right? What are maybe some of the common concerns they come across to making that first step into investing? And then second of all, with that, why work with a financial advisor versus just open up an E-Trade account and click and go, right? Like
that's a great question.
Yeah.
So the first thing I guess I can answer from just a neighborly view. So any investment come from saving.
Okay.
This is just from 1,000 years ago, no matter wherever you are, from which corner of the world, you save the money. From the raining days, right? From the storm, from hurricane, from whatsoever reason. And that saving is the first step.
Okay.
If you call Dave Ramsey, they will say baby step one, right? So because that saving, if you just put money in a high yield saving account, that 3 or 4 or 5% is basically today's inflation.
I see.
So after 5 years, this money is still not able to buy anything you want. Buy that house, buy that camera, buy these pants, buy these shirts. It won't, because of it will increase at the same level of the inflation. So just saving itself is not enough, but it's the first step. The second step is you have to invest. This comes to your second question. What's why we want to work with a good financial advisor, right?
Sure.
Well, many years ago, Vanguard did some research. So they claimed that a financial advisor can bring 3% incremental on the performance if you were managing that portfolio yourself. I don't know how true is that because I try to stay independent from the influence of the big company.
Sure.
But I can see just from the daily interaction from our neighbors. They are brand chasing. They chase the brand. They chase the name. They are not necessarily chasing the profit. That makes your pick of the stock may not be a good pick. So I would, instead of saying working with a financial advisor, I would say working with a financial advisor, whoever has an accounting degree. So you gotta read things before you open your mouth and speak.
So you bring up a really good point because you have that accounting degree. You're used to looking at a P&L, right? Understanding profits and losses. And then I guess that helps you when you're reading, for example, NVIDIA's profit and loss. And you've maybe seen the tactics and you're like, okay, that's legit, maybe that's not. Let me dive a little deeper and kind of figure out how they present the company. Is that the idea? And I'm not picking on NVIDIA, but just in general, on any company, right?
Overall, reading is your weapon against any outside influence or outside opinion. Because when you read, you judge things but independently. You have a financial advisor. Let's say you have somebody, right? Even he or she, this lady or guy, doesn't matter. If he give advice, right? You have to be somehow based on the rational basis. What's the base of this claim? What's the base of where we're saying NVIDIA is doing great or is not doing great? There must be some rationale. So reading is that. Reading is that habit of giving you the insight, giving you the judgment from the paper.
Very good.
Instead of from Facebook, from LinkedIn, from internet, from Google, from AI.
But inflation's very real, right? And investing is a key part of that. And helping hit the goals. So
absolutely, sir. It is one of the supplement that you can help shield your life from the heat of the inflation.
Super important. So if somebody out there in Elyson wants to get in touch with you, how should they do it? Do you have a website or a Facebook? Just message here in Elyson page, or what's the best way to get a hold of you?
Sure. So one thing first is by the SEC and the state compliance. They do not want me to give advice over internet. It's called a social media.
Got it.
No matter is a Facebook or something else. So the best way that I can answer some question generally is probably like a text message. And we have to kind of start like a private conversation.
In person.
In person.
For sure.
And the first meeting is usually free. It's like a free consultation. And we had meetings with somebody, the first, the second meeting, we're not gonna charge because this is related to how we charge the fee. So the fee is on the asset size. Is on the either IRA or individual brokerage. So you can have as much as a meeting with me. There won't be a fee charged like, Leon, how much hourly fee I pay you? You don't have to pay the fee.
Great.
Unless the moment you decide, hey, Leon, I want you to take a look on my retirement account. From that moment.
Got it. Very good. So just ping him, and then he'll get you a text message, or if you want to give us your number, we can throw it out there.
I think my number is out there.
Perfect.
So you can send a message to me, or you can comment. You can say, Leon, hey, reach out to me. I have this idea. I want to invest in this company. So the first thing that we did is read the financial statement.
All right. That's it. That's good. Leon, thank you so much for joining us and sharing what you've learned over the years. And for Elyson folks, if you're looking for a financial advisor and want to reach out to Leon, give him a ring. We'll see you on the next one.